Hello ladies and gentlemen, I'm Joseph Novichkov, Senior Trading Manager at GDM. Today's outlook, we're starting with the share markets in China and Japan. They changed up to their highest levels since August 21 on Friday, while of course the rest of the region faltered ahead of the release of US non-farm payrolls report that could of course provide hints to when the Federal Reserve will start to push up interest rates. According to a survey, we're looking at the NFP report likely to increase with 180,000 in October, while of course above the average gains of 139,000 jobs for August and September. Tracking the Nikkei's 225 index widened gains with 0.8% in the final hours of trading to settle at an 11-week peak, as of course weaker yen buoyed sentiment. China's key Shanghai Composite Index swung up 1.9% to finish at its highest level since August 21. In of course the previous session, the Shanghai bourses entered a technical bull market after gains more than 20% since August 26. That was the bottom of the summer sell-off. European equities traded lower on Friday as of course global markets awaited the latest US unemployment report, which could of course influence the US Federal Reserve's timing of the interest rate hike. The key index, stock 600, opened 0.2% lower. Investors are awaiting the NFP data for October, which will be released later today, with the dollar holding firm on Friday, with investors tenterhooks over whether upcoming US report data will be strong enough to cement recent expectations of a Federal Reserve interest rate hike, of course, next month. The euro, which has been under pressure since the European Central Bank late last month signaled additional easing, it slipped to as low as 1.0834 versus the dollar, to its lowest level since late July, of course, on Thursday. The common currency lost stood at 1.0884, hovering not far from a major support around 1.0810 or 20. A double bottom chart pattern, of course, hit earlier this year. The dollar hit 2.5-month high of 122 yen on Thursday and last stood at 121.64. Closing above the resistance of 121.75 would signal a break above its trading range in the past few months and could of course lead to a retest of the recent resistance at around 123. Also, the British pound fell on Thursday to its biggest drop since August after the Bank of England's governor dismissed the view it would raise interest rates shortly after the Fed. The pound was trading at 1.5216 near its 3-week low of 152.05 touched on Thursday. Gold in the commodity sector languished near an 8-week low on Friday, as of course was set to post its biggest weekly drop since July, as investors positioned themselves for a possible US rate hike this year, pulling money out of bullion funds. Gold had ticked slightly higher, 0.4% to 1107.60 an ounce in Asian trade, not far from 1102.35 hit in the previous session. That was its lowest since September 11. The metal has lost about 3% for the week, the sharpest slide since the week ended July 24. Crude oil prices edged slightly higher on Friday after falling over 2% in a previous session, but of course analysts saying oversupply and a strong dollar would continue to weigh on the fuel market. US crude futures were trading at $45.46 a barrel in late Asian trade. That was about 26 cents up from their previous settlement. And in today's calendar at around 13:30, we're looking at the unemployment rate and non-farm payrolls for US, the major data that will show the direction of the move of the Federal Reserve next month. Thank you for watching. See you next time. Bye-bye.